Risking too much on just one single trade idea can result in losing months upon months of hard-earned progress. Welcome back to the mini-series, episode 5. I'm going to dive into risk management, its importance. I'm going to give you a free system in which you can implement immediately. Myself and my traders use this exact same system, and it keeps us from making this very same mistake. Let's go. Okay, so welcome back to the mini series. Now, it's very important to tell you that this is not financial advice. I'm giving you this education on the hope it's going to stop you making mistakes in the future, and it's going to give you a clean, honest first step into your no doubtably amazing trading career. So, this is episode 5 and it's about risk. On my chart, I've got a little drawing for you, okay? Firstly, what is risk? Risk is the amount of money you put on the line per trade idea. And it's normally done in R or percent. So R would be the amount. So if you're risking, let's say £100, that would be £100 and that's your R, that's your risk. So 3R trade would be £100 to risk and £300 to take profit. I've took a 3R trade. Now, a lot of people tend to do their risk on percentages, and that's what I do. So I'll have my account balance and I'll risk a specific percent per trade idea. This is extremely important to have this dialed down. As a visual representation, I've got a little drawing here, right? These are 10 trades. The orange line at the top, or that looks a bit yellow, they are risking a consistent $100 per trade. The one at the bottom, the red line, they are risking whatever they want to per trade. They've took the same trades. The one at the top is making money. The one at the bottom is losing money. So now you know this, risk management and risk is absolutely essential in trading, okay? So this is something that you need to grasp early on. Write this down, screenshot this chart. If you don't risk the same, you will not make money. It's as simple as that in simple terms. Okay, so what I'm going to do is I'm going to find you an example. We're on the German DAX as always. Let's mark our recent range. You should know this by now. Okay, so we're going to go from the Gambach. This is our previous range. I can tell that we are still looking to buy. Drop down to the 15-minute. Right, we have break 1. This was our previous 15-minute high. So we have break 1. We have break 2. And then now we would look to get in this trade idea. Okay. But earlier on, we had a 4-hour low interacted with. So we are looking to enter this position. In here, we have a sweep just before session with the confirmation candle on. So we're going to use this 15-minute sweep as our entry. We have our confirmation candle and we're going to put the buy tool on this confirmation candle, okay? And we're going to target just this 3%, okay? Now, if you look at my screen here, we have a stop loss size and that is 52, right? Risk is worked out in lots. So if you are to buy something, you need to buy the right amount of lots in which if this trade hit your stop loss, you would only lose the desired amount. So every single trade, you need your risk calculated. Inside Headwise Markets, we use a application called Trade Locker and we have Trade Assistance where it automatically works out your lot size for you. However, if you are new to trading, you can find your lot size calculator on any platform, okay? Just search on your browser and search German DAX lot size calculator. What you'll do, you don't need your take profit level to work out your lot size. You only need your data. So if you double click the long position or sell position, it will tell you the values, okay, on your screen, your entry price and your stop level price. You would have to input these manually every single trade. idea with your account balance, with the amount you want to risk per trade, and it will give you the amount of lots to buy or sell. So this is quite time consuming, but this is to ensure that every single trade you are risking the same. This exact trade idea, if I were to put the stop loss this big, we would have to have significantly smaller lot size to ensure we only lose the same amount, okay? And what I'm going to do now is I'm going to give you a simple risk management plan. Now, what we do in headwise markets, we have a simple set of rules, right? What I'm going to do, I'm going to open this text box if I know how, obviously. And then, why is that just so small? See my drawing ability on these charts, despite doing it every single day, I'm consistently bad. And at least I'm consistent. So we risk 1% per trade. 1% per trade. We take one loss per day. Now this keeps you out of trouble. Now this is extremely hard to execute on. 1% per trade, one loss per day, and we only take one active trade per day per account. Now, this is our first set of rules, okay? So you can have this on your chart, wrote down in your risk entry, and this can be part of your risk management plan. Secondly, we have another set of rules. Let's try this call out again. What I'm going to do is I'll just do it this way. It's a bit easier. When we have a starting balance, let's say our account size is 50,000. If our first trade is a loss and our account balance now is 4,900, 500. I don't know why I said that so badly there. If this is our new balance, we would then risk 0.5%, okay? So negative starting balance, we reduce the risk to 0.05. Now, what we do, right? What we do is we have a whole set of data which tells us how our losing streaks, our winning streaks, our trade duration, and we're going to go into that next. We have a data and it will tell you that over a large period of time, your maximum loss streak might be 6 or 7, okay? Live trading, you can typically expect to hit 80% of your winning trades and take more losing trades. So if your data tells you that you have a maximum losing streak, you could push that up to 6, 7, 8, 9, 10, 11, 12 and be fine. Now, if you are taking a funding challenge, your expectancy, your risk of failure is considerably higher. But by reducing the risk from 1 to 0.5%, you are doubling the profitability, okay? And you are going to remain in the game. You're going to survive the drawdown, survive the losing streaks, and going to come back to fight another day. In trading, people fixate over chasing profits. Profits, 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 profits. Capital preservation is at the core of every single profitable trader. Now, don't get me wrong, you may be following people that play the probabilities game and they take a funding challenge as a dice roll. They know their edge, they know their statistics, and they just draw a line under every failed challenge and every blown challenge, and they just cross that off as a expense within their trading business. That is a lucrative way of trading, but if you are new to trading, if you cannot consistently protect your capital and make profits, you should not, and I repeat, you should not be looking at any aggressive style, okay? So if your balance is negative, you'll go from 1% per trade idea to 0.5% risk. And this is going to keep you in the game. Now, one thing to note, right? Every time you lower, it takes you so much longer to climb out of drawdown, and you'll be thinking, If I'd have risked the full 1%, I would have made profit, etc., etc. But honestly, if you can implement this simple risk strategy into your trading as early as possible and work on adhering to this, really put its importance on a pedestal, right? Really put it up there with your rules. More importantly than wanting to earn money, we want to protect our money. Okay. So this is an extremely short video, right? But every successful trader will stick to their risk plan no matter what. One single revenge trade at risking 2, 3, 4% a trade can not only blow your account, but can not only ruin your challenge, but the psychological damage may take months and months and months to repair. Thank you for joining me on the mini-series episode 5. It's extremely short, but short doesn't mean it's any less valuable, okay? Diamonds are small. This is a diamond of a video. Use this, write our risk plan down. Any questions, leave them in the comment. Thank you for joining me, and we'll see you on the next one. If you have found any value in this video, please subscribe, like, and share it with another aspiring trader, and maybe we can help them on their journey.